What 10,000 shillings invested in these stocks 10 years ago is worth today, and we're going to look at KCB, Equity, and Safaricom. After this example, it is my hope that you'll be able to understand how stocks work and how your decision to either sell or hold impacts your finances. Now, if you had invested 10,000 shillings 10 years ago for KCB, the stock was trading at around 41 shillings. So that means you purchased approximately 241. So when you multiply 241 by 41, you get 10,000 shillings. For equity, the number of shares will be 275, and Safaricom, you'd purchase much more shares with the 10,000 shillings since the price was much lower than the two. Now looking at how much your 10,000 will be worth today, you simply multiply today's price with the number of shares that was purchased 10 years ago. So for KCB, you can see today's price was 21 shillings. So when you multiply that by 241, you get 5,066, and this is how much your 10,000 shillings will be worth today for KCB shares. For equity, it's 9,862, and Safaricom, it is 16,064. Now, you can only realize the gains or losses if you sell the stocks. Otherwise, this will either be unrealized gains or losses. Stocks tend to fluctuate a lot. Let's look at 2020. Now, right before COVID, stocks were trading at their all-time highs. Looking at both KCB and Equity, they were both trading at the 55 shilling level. This was mainly due to the removal of the interest rate cap in November 2019, which was imposed by the Central Bank of Kenya in September 2016. And this led to high demand because investors felt positive about banking stocks, expecting better profits, which in turn drove prices higher. So if you were to look at the value of 10,000 shillings at that time, for KCB it was 13,269, for Equity 15,152, and for Safaricom it was 34,592. Now, stocks tend to fluctuate a lot, as I've mentioned, and sometimes it is so hard to predict black swan events. Now, an example of a black swan event was the COVID, where no one could predict that it was going to happen, and that affects the price of these stocks. However, the key thing here is to buy stocks with good fundamentals at lower prices and being able to sell them at a higher price. I hope you have now understood. Stay tuned and follow for more.